probably heard that they made some changes to the tax code, and what we're going to talk about today is how that affects you as a home buyer. Hello everyone, this is Jeremy Lovett and welcome to the Happy Home Buyer. Today we're going to talk about the new changes to the tax code and what that might mean to you as a home buyer or a homeowner. And to do that, I've brought in somebody who's actually qualified to talk about it, Warren Taryle with Taryle Accounting.
How are you doing? And hopefully we're going to keep everybody happy even with the new tax law changes.
I feel like we can, but I don't know anything about it, so that's why I'm bringing you on it. Let's jump right in. Is there two or three things that are really going to impact the average? Like, let's say somebody's going in, they're going to buy a home here locally, a traditional home, $400,000 home. Are they going to see positive, negative? What's that going to look like for them?
As far as the home ownership and the mortgage and all of those pieces, that's where I'm saying you're not going to see a lot of change. You will see change because everybody, regardless of who you are, your tax bracket dropped.
So everybody's
going to be at a lower tax rate. So let's start off that.
Mm-hmm.
You've probably heard a lot about the mortgage interest deduction being limited now.
Right. And so what did they limit it to?
Well, it used to, and people forget that it always has been limited. We just lowered the limit. So it used to be $1 million. So if you had a mortgage of more than $1 million, you could only deduct the interest on the portion that would be calculated at $1 million. Mm-hmm. They now dropped that to $750,000.
How are we gonna?
I don't know how I'll ever be able to afford that condo.
So how about right now? Like, say one of my happy home buyers here has a little bit of money and they decided they want to buy a home for like $1.5 million. They want to get $1 million mortgage. The fact that I'm giving them a mortgage over $750,000, does that mean they can't write off any of the interest?
No, and that's a great question. Then people get confused by that. No, you still get to write off the mortgage up to $750,000. So what we do is we just calculate how much interest you would have paid had the loan only been $750,000.
Got it.
And you get to deduct that. And here's a place where it might come in because they are allowing you to write off mortgage interest for more than one home. You can do two homes, so your home and a second home.
Got it.
So long as the total isn't over $750,000. We need to talk about something that might impact people, unfortunately.
Okay, what's that?
And that's getting rid of the home equity interest deduction. From January 1st of this year on,
okay, no
more home equity interest deduction is allowed.
Okay.
Even if you've had a pre-existing one, they didn't grandfather those in. So
if I'm sitting on a home equity line right now, my 2018 taxes, I'm not going to be writing off any interest for that home equity line.
Right.
Okay.
Just because in the mortgage world we might call it a home equity line,
mm-hmm.
that doesn't mean in the tax world it's really a home equity line. It's how you use the money that counts.
Okay.
Sometimes I know that you do some strategy with people to help them get into a loan, and so maybe they might need a couple pieces to the loan,
mm-hmm.
and so there's a home equity piece to it, but really that's used to buy the house.
Got it. So if it's part of the purchase, like we do it all the time, somebody buys a $800,000 home and maybe they don't have the full 20% down or they don't want to try to qualify for the jumbo guidelines, we structure a first and a second that are both being used to purchase the home. You're saying the IRS isn't considering that second a HELOC?
Right, because you're using it to purchase the home.
Got it. Okay, so it's people that are just pulling cash out, not using it for improvements on their home, not using it to purchase the home, just pulling that cash out for some third reason.
Right, and that's important you brought up that part too. If you pull cash out after you've already, so you bought your house, mm-hmm. and it's been a couple of years now, and there's some equity there, and you want to pull that out because you want to maybe add on or put on a new roof or new whatever.
Mm-hmm.
So long as you use that money and you put it back into your home,
mm-hmm.
then that interest becomes acquisition indebtedness, and it's deductible still.
I wouldn't say either one of those are horrible news, but they're not good news. Is there any really good news as far as real estate is concerned on these fun pieces?
Well, there's a couple pieces of really good news. And remember, we started off by saying everybody's at a lower tax rate.
Right. Well, there's that great news.
So there's that. If you're looking to do real estate investing, so maybe you want a rental property or a rental property or two.
Right. No need to do that.
In this new tax code, there's some really great breaks that are available for people doing rental real estate.
Gotcha. So they're making it more lucrative for you to get into the investment
right.
side of things.
I mean, the average guy, especially here in Phoenix area, the average guy, they're coming out way ahead.
Yeah.
And if they're an average guy that wants to get a rental property, you're even that much further ahead.
Here's my favorite thing that they almost always do, and I've heard that may not be the case this time. Usually they're like, here's the changes. These are going to impact you. But then here's this like grandfathered period, or maybe we're not going to implement these changes until this date. Like, when does this stuff take into effect?
The grandfather period, like I said, is for any loan that you had before December 15th of 2017.
Okay.
So and that's just that limit, right? So if you had $1 million loan and it was before December 15th, 2017, no changes.
Got it.
It's only loans after that. So it is effective immediately.
Everybody's going to be everybody's going to start out in a better position. Anybody buying an investment home is probably going to be in a better position.
There are so many awesome things that come out of this thing that regardless of who you are, I think you'll come out ahead.
Yeah, but the only way they're going to really benefit from this and see this benefit is if they talk to a qualified individual like you that has any idea what's going on, because I've seen so much misinformation on the internet. So if you have absolutely any questions on any more of these things beyond the whole happy home buyer piece of it, give Warren a call, and we'll talk to you very soon.